66 days away from tax day, and how much you pay in taxes is partly determined by what income tax bracket you fall into. So what do tax rates actually tell you? Here's Timothy Schuster, Senior Manager at EisnerAmper, to explain.
Very common question that I receive is, hey, I'm in a 24% tax bracket. Am I paying 24% in tax? And the answer to that question is no, you're not. There's actually two percentages that you look at. You look at a marginal rate, which is what we've been discussing, 24%, and an effective rate. There's a certain percentage of your income that's taxed at the different tranches. So the first tranche is 10%. So a certain amount of your taxable income is taxed at 10%, then at 12%, then at 22%, and lastly at 24%. And what's interesting about it is, effective taxes is the average of the taxes that you're paying. So instead of paying actually a flat 24%, most of the time the percentages are lower than what your marginal rate is. Now, when you look at the income tax system, there's actually different filing statuses. There's a single taxpayer, there's married filing jointly, there's married filing separately, and there's also head of household. Common question that I receive is, hey, we just had this massive tax reform. How is it affecting me as the average taxpayer in the country? And for the most part, when you look at most of the brackets, in all categories, single, married filing joint, married filing separately, and head of household, you tend to see a trend where most of the actual percentages and the marginal rates dropped. So most people had a favorable treatment.